All right, this article is coming from Pound Sterling Live. Pound to euro rate breaks to fresh 6-month best. Bank of England is key risk. Pound sterling has broken out to a long held range against the euro, a move that hints further gains are possible on a technical basis. The pound to euro exchange rallied to a new high of 1.1449 on Tuesday. The 6-month high comes amidst an ongoing outperformance by the British pound, which is 2023's best performing major currency owing to an improved UK economic outlook and falling gas prices. Developments mean an overtly bearish consensus on UK assets, particularly the pound. Bank of England, meanwhile, remains in a data-dependent mode, which has ensured markets see up to 3 more interest rate hikes coming from the bank before September. So again, they're looking at the the exchange between the pound and euro, but on the charts we do euro pound. So it's going to be inverse related to what the article is specifying. Economist at Lloyd Bank says pound sterling rose against the euro as markets speculate on outcome of Thursday's Bank of England monetary policy. Probably going to raise rates, right? All right, so here we go. The euro pound has officially cracked through the 200-day moving average and seems to get some escape velocity to the downside now. All right, this is pretty much good to know. All right, again, this is showing the pound to euro, but we're going to look at the euro pound. All right, so we're going to start with the monthly chart. And I had no idea that the pound was the best performing, I guess, G7 currency this year. So that's good to know. All right, so this is the monthly chart, and since 2016, prices have been sideways. So you kind of really just want to play the range, but there are opportunities to, swing trade, even day trade, on smaller time frames. Now, this is a 13 simple moving monthly average, and it's pointing up. Price is now coming into that and nipping the moving average. The last time I did it, it paused and rallied. However, these wicks signify a whole lot of selling. All right, so if we go down to the weekly chart, again, so on the monthly charts, we are in an uptrend, right? High lows, high, high lows, extreme high. On a smaller, if you take a smaller section of the monthly average, you can see that price is sideways, right? We might be able to see that on the weekly chart. All right, so the weekly chart again is still showing what the monthly chart is showing, is that we're still in an uptrend. However, if we go to the daily chart, we can see prices on the verge of breaking this daily buy zone. All right, let's go down to the daily. And what you can see is that this level held a couple times. Once, twice, 3 times. So it was great for several bounces with a target at the 0.89. I'm going to take this off the chart now, as we're probably going to breach. Again, as the article specified, we are now below the 200-day moving average as well. I see a level that almost hit on a smaller time frame. We're going to go to the forward chart just to look at that in a minute. And that was a beautiful setup that I missed. Why do I say that? Well, Thursday's candle closed below the 200-day moving average, but pulled back before continuing down. So we're going to look at that level. Now, current price, look to the left, look down. There's really nothing stopping price from getting down to the, I'm going to say the 0.86 level. That's the target. So where can you attempt to get in on a pullback? Let's look at that level here. Guess it did nip the zone. That might have been my zone. How big is that spread? 46. It's about a 40 pip zone. Would have been up 1-to-1 so far. Just want to look left and down. Oh yeah, it's smooth sailing down. It's smooth sailing. Now I think there's news coming out, especially tomorrow. You have U.S. inflation news, and then on Thursday you have the Bank of England. I'm going to put an alert right now. This zone is still good. All right, so potentially, the setup's going to be a pullback to go short. Okay, let's go back to the daily chart just to see. Actually, I'm going to go to the 8-hour chart just to see that zone a bit more. Okay, yeah, so I would tighten up. I would draw the zone like that. Alright, the layout candle was 1 a.m. Not ideal, but that's the zone. So that is now a 60. It's about a 30 pip zone, and 1, 2, 3, 4, maybe a 4-to-1 reward risk. All right. Let me know what you think in the comments. Which way you think price is heading on the Euro British Pound. Thanks for watching. Subscribe. Please like the video.